Welcome everyone to Vested Interest. This is Shane, and in this video we are going to cover the 4 stocks I'm looking to buy in March. Obviously these won't be the only stocks, but these will be the 4 that I'm focused on: NextEra Energy, Comcast, Lam Research, and Alphabet, or Google is probably how you better know this company here. And before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do it, and keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis. I do cover all of my investments every Sunday. We do a portfolio update. I show you exactly what I bought for the week, where my portfolio stands, whether I'm up or down. I'm going to be as transparent as possible. It is free to see what I'm doing on this channel, but if you would like to help me out, if you could take a moment, it doesn't take but a couple of seconds of your time, but it really does help out a small YouTube channel like mine with the YouTube algorithm. Hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed. Click that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this video series once a month as we head into a new month, or maybe the first week of the new month, and show you what I'm going to be focused on. Again, these will not be the only companies I'm focused on, but this will be primarily what I'm looking to add. And really, Google, I'm wanting to pull back just a little bit more into the 160s, but if it stays in the 170 range, I might nibble a little bit, but I'm really projecting here a little bit. I'd love Google to pull back a little bit more so I can add there. There's the thanks button down below as well for those of you who would like to buy me a cup of tea. Really appreciate everyone who's taken the time to do that. And again, special thank you to the viewers and subscribers of the channel. You folks and gals are awesome. The channel continues to grow because of people like you. All right, now that we've got all that out of the way, let's start off with the first company, Lam Research, ticker LRCX. This is out of the information technology sector. Shot up there for a couple weeks, so we backed off, but now it's back down into the 60 or 76, 78 range, right in there, which is pretty close to my cost basis. I am long on this one. We'll talk about that here in a minute. But as long as it stays around my cost basis or below, I'm going to be looking to add to Lam Research here. I'd like to build this position out. I don't mind if this one gets to be my largest position, actually, this one or Google or both, right in that same range there. But let's run through some of the metrics here. Earnings per share is $3.29 per share. Looks like their current PE ratio is 23.33, $23.33, which seems a little high for a company like this, but it does seem to be growing fast, or projected to grow fast. So I think that's not terrible, with a lower forward PE of $20.05. So I like that the forward PE is a little lower than the current. They do have a 92-cent dividend. They do pay out quarterly, so divide by 4. Ex-dividend date was March 5th. Or I'm sorry, it's coming up on March 5th. We're just entering into March here, so that'll be next week. So you want to buy them at least March 4th or before to be able to get the next dividend, right? So I might look to pick up this one early in the week so that we can add this to our dividend pile whenever we're paid out. They do pay out on April 9th, right? So if you buy them the 4th or before, you will get the next dividend on April 9th. 52-week range as low as $68.87. Love them back at their 52-week low there. But again, under my cost basis, anytime it's under there, I'm going to add with a 52-week high of $113 per share. A beta of 1.47, so it is more volatile than the overall market. I'm trying to use that volatility to my advantage. Whenever it runs up beyond my cost basis, I've been backing off. Whenever it drops back below my cost basis, I've been adding to this one. So that's what I'm going to continue to do this month as well. Like I said, if it stays down here just below my cost basis, I will add to it early in the week. Analysts call this a consensus buy. Price target of $97.30, at least according to stockanalysis.com, where I pulled this information from, and that represents a potential 26.79% upside. The earnings date is coming up sometime in April. Looks like April 23rd. Jumping over here to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. To do that, we look at their 5-year dividend yield average of 1.12%. We compare it to their current 1.2, or over here where it says forward 1.2, same number. And since their current dividend yield is higher than their 5-year average, that speaks to undervaluation. Slight undervaluation, at least according to dividend yield theory. Payout ratio on this one is low, 26.14. I like anything under 75%. Return on equity and return on invested capital are a couple metrics I like also to look at on an initial screener. A lot of these are just my initial screener, but this gives you a kind of an idea of some of the things I look at. I do more of a deep dive into the financials on these companies as well whenever I'm looking to buy, and I have done a video covering kind of what I'm looking at for that on a high level. So check that video out if you haven't seen it. But return on equity, 50.42%, smoking high, and return on invested capital, 22.3%. I like 10% or better for both of those metrics. So very nice there. EPS forecasted over the next 5 years at 14.52%. I like 5% or better. And revenue growth forecasted at 10.85%, double-digit revenue growth forecasted. Really love that. I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with that free cash flow. They can pay down debt, they can make acquisitions, reinvest back into the company, buy back shares, pay a dividend, and grow that dividend over time. We want a company to be doing all of those things with their free cash flow as a dividend growth investor, or at least I do. So going back here to June 2022, you can see $2.5 billion in free cash flow, up in June 2023 to 4.6. June 2024, down slightly to 4.2, and in the trailing 12 months, which is the rest of 2024 and part of 2025 now, $4 billion so far this year. They are repurchasing shares there, $3.6 billion in 2022, $2 billion in 2023, up to $2.8 in 2024, and then in the trailing 12 months, continuing that trend at 3 billion shares pulled out of the market. So love that they're pulling shares out of the market. Love their free cash flow. You know, it might be a little bit up and down here, but they're also adjusting the repurchase of shares to match whenever their free cash flow raises as well. So I would actually call it growing free cash flow offset by the repurchase of shares there. Now, my position, excuse me, again, I am long Lam Research, so I have 170.37751 shares here. My cost basis is $77.33. So again, I'm liking this one under $78, under my cost basis. Anytime it drops there, I like to add to this one. So it is slightly under my cost basis, down $100 right now, or 0.76%. Again, I wouldn't mind it if it dropped back into the high 60s, low 70s. I'd continue to add, bring down my cost basis, bring up my potential future returns, and continue to build out this position. Wouldn't mind getting this one to over 200 shares. Again, don't mind if this is my largest position. I think right now that is Johnson & Johnson, around 18,000 into that one. So I wouldn't mind adding another 5, 6, 7 grand here to this one if it stays below my cost basis. So that's Lam Research, number one on the list out of the information technology sector, ticker LRCX. Next up is Comcast Corporation, ticker CMCSA, out of the communications sector, closed out the week at $35.88. EPS is $4.14 per share. PE is pretty low on this one, $8.67. Forward PE a little lower than that at 8.39. Does pay a $1.32 dividend. That's per year. Divide by 4 because they are a quarterly payer. Nice starting dividend yield, 3.68%. Ex-dividend date, April 2nd. So you got about a month on this one, right? We're just entering in. Today is March 1st. So we've got about a month. So long as you buy this one April 1st or before, you will be in line for the next dividend, which pays out on April 23rd. 52-week range as low as $32.50, as high as $45.31. So pretty close to their 52-week low here. Beta of 1, so they're right in line with the overall market as far as volatility. Analysts call this one a consensus buy. Price target of $45.53, which would represent a potential 26.9% upside. Earnings date again coming in April 24th. Jumping over to the right here, looking at dividend yield theory, their 5-year dividend yield average at 2.46% compared to their current 3.68%, or over here, forward 3.68%, same number. Since their forward dividend yield is higher, or their current dividend yield is higher than their 5-year average, again, speaks to undervaluation. Not only undervaluation, but significant undervaluation with a nice margin of safety, at least according to dividend yield theory. Payout ratio, again, very low, 22.46%. So plenty of room to continue to increase that dividend. Not really concerned about any kind of dividend cut on this one. Return on equity is 18.71%. So that beats the 10% I like there. But the return on invested capital is a little low at 7.69%, which is not shocking for a company like Comcast, right? They are they have a lot of lines out there that they transmit their communications on. So there's a lot of maintenance that comes along with that. This is a very similar company to utility company, not quite as bad as utilities, but they do have a lot of reinvested capital back into the company to maintain those transmission lines that they do have, right? Now dropping down to EPS growth forecasted at 8.7%, above the 5% I like, and revenue growth is forecasted at 0.86%. So that is low, but it is forecasted to grow. So I don't mind that at all. Free cash flow, again, I want growing free cash flow. Going back to December 2021 here, you can see 17 billion in free cash flow. 2022 looks like it was down to 12.6 billion, but remember, let's look at the repurchase of shares here in a minute. December 2023 up to 12.9 billion, December 2024 at 12.5 billion. That would have been very close to the last numbers they reported out, so that's why we used it. Repurchase of shares, again, looks like they're a bit cyclical in free cash flow, but they're adjusting the repurchase of shares around their free cash flow growth. So 2021 here, December 2021, 4.6 billion, but then big jump up in 2022 to 13.3 billion. So even though it looks like their free cash flow went down, I would say it really didn't, because they went and almost tripled their free cash flow growth here for I would say it right about tripled their their repurchase of shares here. Same thing in 2023, slightly down to 11.9 billion, but their free cash flow was up. And then 2024, it does look like there might have been a bit of a downturn, because not only is their free cash flow down, their repurchase of shares is down. So pretty good growth there through 2021 to 2023, a little bit of a downturn in 2024. I am long this one as well. I have 292.35531 shares. I am down 9.69% on this one. My cost basis is $39.73. So again, as long as it remains below my cost basis, this one I am going to be adding to, 4, 5, 6 shares a week, as long as it's below my cost basis here. All right, so Comcast was number 2. Number 3, and this is where I am projecting a little bit and really hoping that this one continues kind of its downtrend that it's been on lately. We are talking about Alphabet. You probably know them better as Google, ticker GOOGL. Now, there is another one, GOOG, for this one as well. I buy the GOOGL shares. This gives me voting rights as a shareholder versus the GOOG shares. That's why I buy these ones. Closed out the week at $170.28. EPS is at $8.04. PE ratio, again, seems a little elevated at 21.17, but forward PE at 18.95 is below their historic average. So I'm looking to, again, I'm projecting a little bit, hoping that this stays in the 170s or lower. I want it right around the low 170s. I really want it back in the 160s. Again, this is one I'm long in as well. We'll see my cost basis here in a little bit. Low dividend on this one, starting 80 cents. They are quarterly payers, so divide by 4 with a dividend yield of 0.47%. Don't even know what their dividend growth is going to be yet, right? They've only been paying dividends for about a year yet, haven't even seen their first raise. So really hoping that they are going to be very aggressive with double-digit raises, since their payout ratio we'll see is very, very low here. Ex-dividend date, March 10th. So you want to buy this one on March 9th or before to get the next dividend, and it will pay out on the 17th. So another one I might look to buy early next week if it's 170 or under. 52-week range as low as $130.67. Would love it back down here, right? If it was to drop into 130s or 144, I would probably just focus on this one for a while and double up my position with a high of $207.05. A beta of 0.99, so just a tick below the overall volatility of the market. Analysts do call this one a buy as well. Price target estimate of $212.79 would represent a potential 24.97% upside. Earnings date was February 4th, so if you want to check that out, go to their homepage. They usually have it there. Jumping over to the right, again, I'd like to look at dividend yield theory. Unfortunately, for this one, we can't do it. They don't have 5 years of dividend yield to look at, right? So we're going to just have to go with what we think a fair price is and wait for the 5 years to kind of play out to see their 5-year dividend yield average. But this should increase, I'm assuming, this year if they're going to increase their dividends. Payout ratio extremely low on this one, 7.46%. So again, I'm hoping for double-digit raises on this one when they do start that. Should be this year sometime. Return on equity at 32.91%, over the 10% I like there. Return on invested capital, 21.42%, again, over the 10% I like there. And EPS growth, this one very similar to what we saw with Lam Research. EPS growth forecasted in the double digits at 16.15%. Revenue growth forecasted in the double digits as well, 11.52%. Really like that. Free cash flow growth, again, I want growing free cash flow over time. So the company is safe, dividend is safe, they can reinvest back into the company, pay down debt, make acquisitions, pay dividends, buy back shares, and raise those dividends over time, which we're hoping for double-digit raises on this one. December 2021 here, you can see $67 billion in free cash flow. December 2022 looks like it dropped to $60 billion, but again, we'll look at repurchase of shares here in a minute. 2023 back up to $69 billion, 2024 $72 billion, and repurchase of shares again back to 2021 here, December 2021, $50 billion in shares taken out of the market. December 2022, 59 billion. So even though it looks like free cash flow went down, they increased their repurchase of shares. Looks like free cash flow went up and they increased their repurchase of shares in 2023, and same thing in 2024. Free cash flow up significantly, repurchase of shares up as well. So love that their free cash flow is growing. Love that they're significantly decreasing their shares in the market, buying those back. Long again on Google, I do have 70.07226 shares of this one. My cost basis $161.63. Would love it to pull back below my cost basis. 130, 140 range, I would be adding very heavily to this one. With it in the 170s or even 160s, if it's above my cost basis, I'm only going to be nibbling here, 1-2 shares a week, and to see if it does drop below my cost basis. Obviously, if it's above my cost basis, it will bring it up slightly. But if it's within 5%, I'm going to add. All right. Last but certainly not least, NextEra Energy, ticker NEE, out of the utility sector. And if I didn't mention, Google was out of the information technology sector on the previous slide. But NextEra Energy is another one I am long on. This one is well above my cost basis, but is pulled back enough that I am interested. Close out the week at $70.17, and I really want it like $73, $74 or lower. Love it back in the 60s or 50s. But for right now, I am interested in adding nibbling here as well. Not a ton, but wouldn't mind 3-4 shares a week so long as it stays under 73 or lower. EPS $3.37 per share. Price to earnings PE ratio seems a little bit elevated for a utility company, but this company is growing pretty quickly. $20.82 for the price to earnings ratio currently. Their forward PE a little lower at $19.11 per share. Dividend is $2.27. That's paid out on the year, so divide by 4 with a nice starting dividend yield of 3.23%. And this one is growing pretty fast. Double-digit dividend growth on this one for a utility company is very good. Dividend date, so if you would hold them now or would have held them on the 27th or before, you will get the next dividend that pays out on the 17th. I'm looking forward to it. I do hold them as well. We'll look at that here in a minute. And 52-week range as low as $53.95. Again, would love them to drop back into their 52-week low. Not sure they're going to make it there. So $70, around $73 and lower. I am interested in nibbling at this one. I do have a position here I want to continue to add. High of $86.10. A beta of 0.58, so much less volatile than the overall market. Analysts call this one a consensus buy. Price target of $86.60 would represent a 23.42% potential upside. Earnings date was April 22nd, or is April 22nd, coming up here in a couple months. So if you want to know more about that, go ahead and check them out then. All right, dividend yield theory on this one. 5-year dividend yield average of 2.29%. Current dividend of 3.23%. Since it is higher than their 5-year average, speaks to undervaluation and significant undervaluation, and with a nice margin of safety, at least according to dividend yield theory. Payout ratio is a little higher than the other ones at 61.13%, but for a utility company, that is actually very good. A lot of times you'll see them in the 70, 80, 90% range. So I like this one. It's still under the 75% I look for. Jumping down to return on equity and return on invested capital, utility companies never really have good metrics here. This one is no different. Return on equity a little bit below the 10% I like at 9.51%. Return on invested capital at 3.32%, very low. But again, I don't think I've ever seen a utility company beat the metrics that I look for here of 10% or better. Now, EPS growth does beat the 5% I'm looking for at 8.79%. They did not have revenue growth forecasted. Same thing with free cash flow. A lot of times these companies that have to reinvest a lot of capital back into themselves, whether they're building out new solar farms, new wind farms, making repairs on their existing facilities, existing transmission lines, that sort of thing. These type of companies have a lot of reinvested capital back into the business to keep them going and to make repairs, right? Could be from a storm, could be building out, like I said, a new solar farm, a new wind farm, or just repairing existing, right? If you have a big storm, let's say you have some hail that comes through and busts up a bunch of solar panels, right? You're going to have to replace those. That's the type of things that these companies have to continually reinvest for. All right, so going back to December 2021 here, negative $277 million. 2022 was negative $1.4 billion. That seems crazy. But then right back up in 2023, $1.7 billion to the positive. In 2024, very good year, $4.7 billion. Now, repurchase of shares, they're saying they haven't repurchased anyone going back all the way to 2021. But if you look at the trailing 12 months, which now is just really January and February, they have repurchased about 47 million in shares. So it looks like in 2025 they are going to be repurchasing some shares. I am long this one again. I have 188.70646 shares. Wouldn't mind getting this to over 200 shares here while it's around 70 or below. Like I said, 73 or below is where I'm looking for this one. I am up 24.41%. So again, I will be bringing my cost basis up. This will be the only one of the three, besides maybe Google, if it stays in the 170s and doesn't drop below my cost basis, that I will be bringing up my cost basis significantly by adding. But I'm not looking to add a lot to NextEra Energy. Like I said, I'd like to get it to over 100 shares, so maybe 4 shares a week or something, so long as it stays around that 70, 73 or below. Again, I'd love it to drop back in the 50s or 60s. If it was a drop below my cost basis, I might add significantly, but I don't know that it's going to get there. We'll see. My cost basis is $56.40. Again, I like it under 73. All right, those are the 4 companies that I will be focused on. Let me know what 4 companies, or 3 or 2, whatever you're focused on for the month of March. Let me know what you're looking to buy. Here are some other companies I think are still presenting some fair or below value valuations right now. Pfizer, Occidental, this is one I'm still going to continue to add to. I've got 6 more shares to get over 200 shares, or get to 200 shares. So I'll probably add to Occidental next week, get over that 200 share mark or right to it, maybe add those 6 shares to get to 200, and then nibble a little bit on this one so long as it stays around my cost basis. This one is one that Buffett has recently added a lot to. His cost basis is higher than where it currently sits. He's in the mid 50s. It's around $48, $49 per share. That's where I've been adding this one to my portfolio as well. General Mills is another one. Haverty's Furniture, I'd like to nibble on this one as well. Below my cost basis currently, it is in my portfolio. General Mills is not, Leidos is not, General Parts Company is not, but these all I'm seeing value in as well. Genuine Part Company, Leidos is out of the information technology sector. It has its hand in a bit of the defense area as well. So I think it's getting hit hard right now because of the potential cuts that they're seeing. Not sure how that will impact them long term, but might be a buying opportunity. Chevron's another one I'm seeing value. Valet is in my portfolio as well. I've been adding to this one, 10. I think I added 10 shares this past week. Cisco I was adding to for the month of February. It's kind of rebounded, so I backed off that a little bit. LyondellBasell was one I was adding to. It's still below my cost basis. This was one I was focusing on for February as well. Now that it still remains below my cost basis, so might look to nibble there, just 2, 3, 4 shares whenever I drop some on there. And Nutrien is another one. There are a lot of companies pulled back right now, big pullbacks in the market recently. Hopefully you're taking advantage of them. What are you buying? What are you still watching for further pullback? Google is one that, again, I'm going to nibble on if it stays in the 170s, but I'd love it to drop below my cost basis. Let me know what you're watching in the comment section down below. Would love to hear from you. All right, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Share the videos with anyone you think that might find value. And drop a comment down below. Let me know what you think of these 4 companies. Are they companies you're buying? Do we have any ones that are the same in our portfolios? And would love to know, if these aren't ones you're focused on, what you are focused on for the month of March. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do a Stock Pick of the Day series Monday through Thursday, where we take a look at a company stock, run it through my screener, see if it makes it on my watch list. So if you have a company you'd like me to cover in that video series, drop it down below. And don't forget to hit that notification bell and hit that subscribe button as well. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.